Hello, everybody. Welcome to another special episode of the Loan Officer Marketing Podcast. We are here with Damon Germanides. Damon, welcome to the show.
Thank you so much.
Awesome.
Pleasure being here.
Now, Scotsman's Guide this year, over 200 million, I believe, cracked the $202 million volume mark. Congratulations.
Oh, thank you so much.
And you're absolutely tearing it up. And you've got an incredible team behind you as well, do you not?
Yeah. My partner also did around the same.
Wow.
We work collectively on a lot of deals, so we kind of divide and conquer, and then the rest of the team as well. So we're very delighted that we had, I believe five people in the top broker section there. So it's a testimony to a lot of hard work, and also a good geography for bigger loans, obviously. So we're not necessarily a huge volume shop, but we do find niche jumbo loans at a very high level.
That is amazing and an incredible start to the episode, because I always like to ask, how did you do it? And focusing in on that type of market. So how do you go after those larger loan sizes? What's your strategy for going out and finding that business?
Well, I think it's all it all was it all started after the financial crisis and the great financial crisis in 0809, and then we got basically my partner Chris Fury and I were like, what can we do to separate ourselves from the pack? And so we started really honing in on the more niche product, whether it be very difficult underwriting, complicated by difficult, not bad quality, or foreign nationals, or unusual property types, or whatever it was that would make the borrower or the scenario be stickier. And we thought that those scenarios were being underserved at the moment. This is pre non-QM lending and everything else that came about. So and that, years and years of doing that, you get a reputation throughout your primary markets that you know how to put down deals, and that's kind of how it evolves. But it doesn't come without uh, you know, being very fundamentally sound, because talking
Right.
about a deal and not knowing what the heck the borrower's telling you doesn't get you anywhere. So you really got to understand tax returns, cash flow, for foreign nationals, what country are they from? How are they earning their income? What documentation to ask to make sure the bank can get comfortable? You got to understand entity structure, trusts, irrevocable trusts, limited partnerships, general partnerships, LLCs, corporations, and get really be comfortable talking about that on the phone to get these deals in. So if you can't articulate well what the strategy is for this borrower on the phone, you lose them, they move on. So you have to be also, dedicated to understanding a lot of different types of um, financial type of information that, some people just don't want to spend the time learning, candidly.
Right. Yeah. You got to know your niche. And, it's so funny because we focus so much on marketing here in the podcast, but in these high level conversations with producers like you, it almost always comes back to process. You have to understand your product. You have to know your process. When somebody comes through your process, they have to have a phenomenal referable process. And that's ultimately what helps drive the database marketing and people calling back. So when you have a new team member that joins your team, are you training them on those types of products and bringing them up to speed, or does everybody on the team kind of have their own way of approaching their own niche?
No, I mean, we're small and boutique, so we probably it's a little bit of I mean, it's a little bit of a swim or sink mentality here, but there is motivation to help some of the younger uh, brokers that have come on board with us. Assuming they're willing to come into the office and spend the time.
Right.
Uh, and it's really a learning by osmosis a little bit, in that you listen to the calls. If you have a deal, we're happy to kind of guide the call for you. Bring the lead in. Let me help you guide the call. See if we're of value. Um, and that's technically that's how I learned, is just by trial and errors, honestly. So, um, but it's a little bit of that. But we do have like some best practices and things we like to instill in the team members on how to do things the right way. Um, and then it's just practice. These scenarios are unique, so there's kind of it's not cookie cutter like a Fannie Mae type of DU underwrite because
Yep.
it's requires you to review the documents and understand what's really going on, and a little bit more, definitely more work, definitely more sticky of a borrower. They're not going to go away so quickly, but also
Yep.
harder to put down.
Yeah. And phenomenal relationships with referral partners as well, because once you
Yeah.
get the deal done, that's a whole lot easier to maintain that relationship. So that leads us to the favorite question of the podcast, the one that everybody likes. Like, where do you get the majority of your volume from right now? Like, what are the deal sources? Is it database? Is it referral partners? Like, where are you getting the majority of your loans from right now?
I mean, it's a combination. We're the preferred lender of two boutique real estate offices in our primary market, so we're in there a lot. Kind of shaking hands and being of value, and playing the long game in those offices, whatever those real estate brokers need, either my partner or myself or at one of the offices, and we have our key guys at the other, just building connectivity over time. And what I tell my team is like, look, you know, create personal relationships with these people in the office because you have access to them. Let's
Yep.
take those high producing real estate brokers to dinner, and let's not talk about mortgage. Let's get to know them, and let's be their third choice to start. They have the
Yep.
first and second. Let's pick up. Let's earn their business by doing the harder, more challenging loans, and be honest with them that this may not happen, but we're willing to try if it's the last resort. And then over time, we'll become the second and then the first. Hopefully,
Yep.
not in every situation, but more or less become part of their, basically their trusted network. And then
Yeah.
I write a weekly commentary and have for about 15 years on the market that goes out to about 25,000 people, I think. So that shows our dedication to the mortgage space week in and week out. Um, we use technology. We have a good CRM. We have a good marketing team. We're sending out what I consider to be thoughtful pieces all the time. Um,
Mm-hmm.
and and then just the basics: texting people, calling people back right away,
Yep.
following up, uh, you know, uh, being the being transparent, and just getting, building that way. And then with our financial advisor network, sourcing loans for that cohort without taking away their banking, which is their financial advisory. If a financial advisor calls us for a loan, we don't go to find another bank that'll do the loan if they take all their money over to the new
Right.
bank. That's not helping anybody. What I want to
Mm.
find is something very close to what that other lender would offer without the banking, because
Right.
the financial advisory services should stay with the financial advisor. It's not our job to rip that away from them and find a loan and then be like, okay, got the loan done, and the referral partner loses their client. That's not the way that should work. So, and then just candidly expanding our horizons. A couple of years ago, we started a direct bridge lending business, which is a separate business to Insignia Mortgage. So now
Huh.
we're growing that business fairly rapidly, where we're actually funding loans ourselves and growing that network for our entrepreneurial real estate developers and other mom and pop type of builders. So
Huh.
that's a natural kind of very, very symbiotic business to mortgage, because now instead of calling someone for a construction loan, they're calling us for that as well. So we continue to evolve as the market evolves.
That's amazing. And so, are you taking that new product line and going back to all of the real estate agents that you've got relationships
Correct.
with, making the announcements of it? All the
Correct.
financial
Yep.
planners know about
Yep.
it.
Yep.
Excellent.
Leveraging mortgage to launch Insignia Capital, which is our newer business. So, um, and that's been very, very, very hard work, but very rewarding work as well.
And referral based work. Once you help somebody that's in that type of lending scenario, those databases are deep and they're very responsive, because once you become known as the guy that does that type of financing, all the entrepreneurs are hanging out with all the other
Sure.
entrepreneurs. It's a great referral network.
Yeah, no, and it's a great compliment to what we do on the mortgage side. Well, the other part of that business that's interesting is if you're a professional, small sized, uh, call it builder or luxury fix and flipper or just regular fix and flipper, you're doing four. Let's call it in a good year. Some are doing five and up, but some are doing two or three a year. Just think about that. You don't need to go find 1,000 clients. You can find 100 and be busier than a bee for
Hmm.
all year long because that's their profession. They're in and out of deals every 3 months, 4 months, 6 months. So that
Yep.
it's a very interesting business. Plus, if you're putting down a loan, I mean, if you can put down a bridge loan for a real estate broker in 1 week, they're going to call you for everything because like they just got paid in a week and there was
Yeah.
it's fast, you delivered, the borrower's thrilled. It's a great add-on to mortgage.
Yep, I could not agree more. Now, I'm a student of success, and you're incredibly wise and successful. So you get a new project like that. And you're like, okay, I got this new thing. It really is like starting a brand new business all over again. What's your philosophy on how you're going to grow the business? What were the steps that you took to say, okay, I've got this product, I'm going to go get these customers? What was the first thing that you do? How did you approach thinking about the growth of that?
Well, we got lucky in one way is that my Chris, my partner's brother, was in the space for many years, and he wanted
Okay.
to. He had run another business similar to what we're doing in capital, and his partner, I believe, wanted to retire, and so he wanted to keep going for one more run. So we did have a very good, strong fundamental understanding of how to underwrite the loans,
Okay.
and we had capital sources. And what we needed to do is just build the brand and build the flow and
Yep.
get the word out there. And we started slowly, and then obviously we started to get some really good traction in 22. And then the Fed did the jumbo, started these what they called the jumbo rate hike period, and that spooked us a bit because we didn't want to get stuck with uh, you know, with loans that were much under market. Not no delinquency risk, but just the rates would be way too low.
Yep.
So that kind of put us in. We had to kind of reevaluate the market, and then actually with the market normalizing, it became very good for us because the returns became normal again, and we started to get people calling us wanting to buy loans, do business with us again on the back end. So
Right.
that kind of started our uh, bullishness in the business, and
Yeah.
then just a lot of time, a lot of phone calls, a lot of talking to people, and it just kind of happens organically, and you just stick to your knitting, and you just do it day in and day out, and you just over time something just clicks. I can't explain it. And you have to just be ready for the moment when it does. Um, and that's the same thing with mortgage. Given how hard it's been, it's like I've kind of just forgotten about how hard and miserable the business has been the last couple of years. It was easy for a long time. And what I tell friends in the business, I go, look, this has always been a cyclical business.
Yep.
The Fed stepped on rates for 12 years. People thought rates were never going up again. And it became a really, much easier business. But I actually wrote a piece for Scotsman Guide about 8 months ago. And I basically said that this is the best time in my career to be a broker because how are you going to get if you need a bank statement loan, like you don't go to Bank of America, no offense against Bank of America, but you're not going to Bank of America for a bank statement loan. Those loans are all being put down through brokers because funding, um, the funders of those loans, they don't have a retail presence. They want
Yep.
the broker to deliver them the loan because it's more efficient. So,
Yep.
or a mortgage banker that funds to the bigger aggregators. So that's where there's a lot of value. Just with one example for brokers now. So and that's how I feel. So it's really tough, but and that's how I became kind of got my start in 08, 09 was through the tough part too. So I feel
Yep.
like it's a reliving the cycle again, just with a little bit more knowledge and hopefully with maybe not as much energy as 08, 09 as I get older, with a little smarter way of doing it. So we'll see.
That's amazing. Well, Damon, thank you for being so generous with your time. I sincerely appreciate it. It's so much value. Like, make the phone calls. The market is there. There's far less competition for the motivated loan officers that have a plan and that have the time and that actually dedicate themselves to the business. There's more than enough opportunity out there to grow. So that's an incredible message. Thank you for sharing. If people want to learn more about you, new business, old business, reach out. How do people get a hold of you?
Oh, easy. Just www.insigniamortgage.com, Insignia mortgage.com. And our bridge lending business is insigniacapitalcorp.com. So,
Awesome. All that will be in the show notes for all of our listeners. And Damon, thank you again for your time and for being on the show.
my pleasure. Thank you, Chris.